Hello everyone and welcome back to the show again. So let's get started. So as you can see, SPY actually has a huge drop yesterday. So actually the market has a huge retracement pullback yesterday per se. And you can see, so this is the first line of resistance, which is why I mentioned that upon here you should have taken your 50% of your profit or partial profit. And then upon hitting here would have been my stop loss. So I would have only been able to take at least this part of profit and this break even. So overall you still have been a net profit trade. And this trade will have been officially closed out. Okay, so let's take a look at price action. Wow, okay, this was a really huge and fast drop because there was a gap down. We release gap up, gap down, and boom. Okay, so now things don't look good, especially because this daily candle actually closes below this 200 simple moving average on the daily chart. So today is a very key day to look at. Today is a Friday. So there could be two scenarios, or I mean, there are many scenarios that could play out. For example, if we actually accumulates here, which is a rather bearish sign, or if we actually have a strong bounce, then there could be a continuation factor. Or if we just go strongly below, the next possible support would be somewhere here, 2,950 mark. So there is a tentative support, or it may even go touch briefly this 50 simple moving average as well at 2,900. So yeah, 2009 to 2009.50 is a possible next level of support. Or if it does fully retraces, this is a potential retracement zone that I will look to possibly add in for long-term investment. So you get this 0.5 to 0.382 to 0.5. With a little bit more greedy, you probably wait around here 0.618 to 0.786. So personally for me, I wouldn't say I look at any particular levels per se. What I would do is I'll wait for some sort of reversal sign. So when I see it touches any of these level and there's a strong signs of support in terms of price action, that's where I'll enter for my long-term investment itself. But if I was looking for a trade, in addition to seeing support at those levels, what I want is also a break in terms of market structure. So that's slightly different. That's very different when it comes to trading versus investment. So that's something you have to bear in mind. Okay, so yeah, let's update the market structure. So in terms of market structure wise, right now officially you will still get a bullish market structure because this is a high, this low has yet to form yet. So even if it could actually just continue upwards, or it could just accumulate over here. So yeah, market structure remains bullish. Market trend has turned bearish because it is now price is below this 200 simple moving average. So this is bullish and this is bearish. And in terms of the strength of the trend wise is lower because these three levels have not done yet. Okay, so that's for S&P 500. Let's over to the next one, which is the Nasdaq 100. So it turns out that even though it has broken above this key resistance, the pullback is pretty strong and broke past below. Let's take a look at price action wise. So the drop was rather strong, but the next level of support, which is over here, which is very near this 20 exponential moving average. So that's a good sign. So could there be some sort of a bounce today? Possibly. But if it does fall below, let's use the Fibonacci to have a good guess of what the levels it could fall to. So yeah, I could find somewhere around here, especially when you got some sort of resistance and support over here. So this 0.236 could be the first line of support. But where I would add more is between, I guess, over here, which is the 0.382 and the 0.5 region. I will add my first batch. And if it does fall below here, I'll add my second batch as well. So yeah, second tranche of investment for long term. But that is clearly on the investment methodology. Yep. So let's update. In terms of trend wise, it's still strong because you see this tree is a line. In terms of the market trend wise, it's also bullish because prices remains above this 200 simple moving average, unlike the S&P 500. And market structure wise is also bullish because there is a formula high in the window. So trend is bullish. Yeah. Let's take a look at for example, you can see the huge pullback. If it further supports over here, you still continue upwards. So that's the way things can pay up. You do take note of that. And then, yeah, let's move over the code. Okay, so over at code, okay. So yeah, the reason I draw this, like what I mentioned, is there's two short setup for here, because I can see here this is a high, a lower high, and this another lower high at 1737. 68, this is 67. So because of this, right, and this pullback, I still lean towards that it's possibly that even though right now, as you can see over here, is in the range bound kind of channel or flat kind of channel. So look for possibly short if it has closes there. So look on the shorter time frame to see forms break the market structure. So yes, it is. You can see a high, a lower high, a low, and a lower low. So what you can do is you can put your sell stop entry right below here. Price action. Yeah. So yeah. So when I do enter a trade, I use the price action. So I will put this below this 200. Yeah. So somewhere here. Stop loss somewhere above this at the top. So a sell stop order will be triggered upon the break of maybe even 17. Yeah, just a little bit of spacing between this low and here. So the meaning crosses below here, say 7.43. So this region, I'll look to enter a possible short, sell stop order, and then over here this will be the profit for target 1. Yeah, actually no, this will be the entire profit taking, simply because like I mentioned on the daily chart, you can see clearly that this is in the range bound channel, so you wouldn't want to see, you wouldn't know exactly when would this breakout over here or over here. But what I do know is that if it touches crosses below there, there's a likelihood that it will go down towards the bottom of this channel itself. So yeah, that's a possible trade setup if we look for. Okay, so in terms of updating this, in terms of market structure, you can see these highs and low. So yeah, this is bearish, and then this is strong. So okay, so for those people who are joining by the first day, I refer to the strength of the trends by how the moving averages are aligned. So for example, you can see these three, the 50, 150, and 200 are arranged in the right manner. So therefore, it's a strong bullish trend because price is also above this 200 simple moving average. Okay, so let's move on to the next one, Euro. Okay, so for Euro right now, in terms of market structure-wise, this is still high, a higher high, low, and a higher low. So market structure remains bullish. In terms of trend-wise, price is also above this 200. So that wise is also bullish. Okay, then in terms of trend, it's also remains strong. So yeah, it's a negative impact. Tendency that is trying to crossover in terms of normal because there's going to be a possible switch from a strong bearish momentum, bearish trend to a normal trend, which means that there's a possible transition to a bullish trend kind of transition phase. Okay, so in terms of price action wise, you do see some sort of divergences on the RSI with a higher high, but actually a lower high on the RSI. But does that mean that you go for a short? My answer is not exactly, simply because high can risk this key market structure remains bullish, and I would not take a counter trend trade unnecessarily. Because if you were to take a counter trend trade, for example, you look to short over here, the first line of support will be somewhere along here, and then you have to have an extremely tight stop loss, which is very ridiculous. Right? We have a very conservative tight loss, your risk to go less than 1, which is not something I go for. So even for a swing trade, I tend to go for a swing trade with at least 1.2 as a bare minimum mechanism. Or for very, very rare scenario, I'll take 1.1 for the first target and 1.5 for the second target. So that if it does hit both targets, the average will be around 1.3. So that's my intention. I would not take any trade that's below 1:1 risk to reward under most circumstances. Okay, so if you're looking for a pullback, I will still wait along somewhere here. So if it does pull back to here, find some support, especially if this 20 EMA catches up, then you can take a long trade with the upside moment potential to be over there. Okay, so that's update for Bitcoin. Let's move over to the next one. All right, so for the next one, like what I mentioned, it was a bullish market structure because it was forming higher highs and higher lows, but now there was a clear break. So over here, I was actually triggered my entry in terms of the buy stop order. I was actually triggered stop loss yesterday in terms of my trade, not for Bitcoin, but I entered for Ethereum, which I find to be relatively similar in terms of pattern, but it was less volatile with less weak in terms of the week wise, a bit shorter. But other trades was actually profitable in that sense. Okay, so but more to update this, what you can see here is a high, a lower high, a low, and a lower low. So there is a reason why. Okay, so a lot of people will be questioning, why do I not take this high and this high, and why is I take this and this? So that is actually very discretionary, simply because this and this is very close in terms of the high. And more importantly, because if you were to look at a downtrend sort of Elliott wave kind of theory, you'll understand that even for a switch in terms of market structure, there will be corrective wave where they refer to this as A, as B, and C wave. So corrective wave tend to form in level 3. So which is why this is a very discretionary thing that I must emphasize. So yeah, so in this case, if I identify this as a high, this is a lower high, this is a low, this is a lower low, so this has officially transited to a bearish market structure in the daily chart. And trend line remains strong. This trade is high, and price is also above, so it's still bullish. So yeah, so market structure is the first sign of weakness that this market is showing. But that said, if you see over at the longer term perspective again, this is a high, this is a maybe this is a low, this is a higher low, and this is potentially a higher low. So let's draw this trend line, which will be typical now. Yes. Okay, so there is a potential that this could still retrace somewhere around here, the 9.1. As it touches, if you look at the price action, so it actually did touch. So that do mean that there's a potential that it actually shows strong strength in it, and you could resume back to it. So for me, what I'll be looking for is, even though I lean towards the bearish buyers, I will look for a break in the market structure towards the downside before entering any short trade. Especially with this slope as a trending support, what I want is to break below before entering the short. So this 50 simple moving average is now the primary support I see it, and it has to form both a bearish market structure and a break below that before I enter potential short. So potential short could be somewhere along here, with the time stop loss along here, and yeah. And your target will be somewhere above this 200 simple moving average. So yeah, this could be a decent risk. Yeah, so I'll first take my profit here, which is target 1, and then my target 2 profit. So if it hits both, I'll have 1.75 kind of risk to reward setup. Okay, so other than updating the daily one, let's look at the 4-hourly chart. So yeah, so what I want on a 4-hourly chart is basically I still want it to go below, because it's a high, this is a potentially lower high, and I want a lower low to form, which is why I need this to break. And I don't just target this close, but rather I target the low of this. So it has to go below. That's my conservative approach that I stick to. So yeah, so that's why I set it over here instead of setting it over there. That's the main difference. Okay, but if you're looking at market structure wise, right now it's this high. This is a low, this is a lower low, this is a higher high, so I will still see in the neutral territory, because this is a higher high, this is a lower low. So yeah, it's actually neutral. And right now, yes, yet to close, so I'll take the previous candle, so it's actually below, so it's actually below. In terms of trend wise, it still remains strong. It can align nicely. So what I will do is I'll wait for break some. So the previous notice yesterday was let's take a look. 907. Entry would be somewhere somewhere below this. Yeah, so that would be a possible entry, but what I want is I'll put a sell stop order there. Alternatively, what I would actually prefer is I would prefer to go down there, accumulates over that region, then instead of entering when it goes below here, the sell stop order will actually enter slightly above with stop loss right above as well. So there's two different approaches depending on how the price action works out to be. But sell stop order will be one method as well. Okay, so the target I mentioned first target will be at 8.5p. So this will be the trade setup plan I have in mind. So yep, that's it for the day, and I'll see you guys tomorrow with a great update, possibly on this S&P 500 and Nasdaq. Let's see how it goes tonight. Otherwise, have a great day, everyone, and I'll see you guys tomorrow. Bye bye.